Welcome back to another YouTube video of FlareFX, where we make trading very simple. Now in today's video I'll be breaking down market structure. This video has been heavily suggested, so watch till the end. If you're new here, make sure to hit that subscribe button, hit the notification bell so you know when I post. Make sure to leave a comment down below if you found this of value, and if you're coming back as a new viewer or an old viewer, welcome back, Flare family. It's a place where we always win, right? So watch till the end for some hidden gems. Right, before we even get into the nitty-gritties of the market structure, right, I want us to understand the different types of markets they are and how they influence the way we trade, right? So understanding where the market is trying to go will make it very easier for you to kind of identify where the major highs and the major lows are, right? So we have uptrend, we have a consolidation, and we have downtrend, right? These are the three different types of markets we have, but in this video I'll be focusing more on uptrends and downtrends, right? Because consolidations are mainly helpful, especially when they're for liquidity and institutional like order blocks and stuff like that, right? But for now, understanding what a downtrend is filled with higher highs and higher lows, right? And understanding that consolidations is just equal highs and equal lows, and then downtrend is mainly lower lows and lower highs, and then the way we use these in the markets help us very much so we can execute. So that's the first step, understanding the different types of markets, because that's the first step you're going to do in identifying when you're looking at the charts, right? So now let's move on into the different types of markets and identifying like the ideal market structures, like bullish and bearish markets, right? So now, since we understand the different types of markets, I just want to break it down so you understand an ideal uptrend and ideal downtrend, right? Because a consolidation is just high, like equal highs and equal lows, right? So now I'm coming into an ideal uptrend, right? I'm mainly calling it an ideal uptrend because in the market it does not look as as beautiful as it does look right now, right? But for purpose sake and just explanational wise, right, when you look at this, an uptrend is a series of higher highs and higher and lower lows, right? So now basically this is a high, right? And then this is a low. Let me just use this thing for clarification. So this is a high and then this is a low, right? And as soon as price pushes higher and higher and then breaks the previous high, then we can classify this as a break of structure. A break of structure indicates a trend continuation, right? Hence why we call it an uptrend, because it's a trend continuation. So the more breaks of structures you have indicates the higher and higher the trend is carrying on, whether it's lows being broken, whether it's highs being broken, depending on the situation of the trend, right? So now obviously there's different terms that we call these higher highs and we call these lower lows, right? So understanding the major highs and the major lows in the simplistic form, so I'll even break down a bit deeper so you can understand. I just want to really touch on the basics so you can understand what is really happening when we look at an uptrend, right? So in the most simplistic sense, it's just a market that's continuously creating higher highs and lower lows through breaks of structure, indicating trend continuation. That's what an ideal uptrend looks like. Right, likewise with an ideal downtrend, right? Price is just consistently breaking lows and lows, printing breaks of structure, indicating a trend continuation to the downside, right? But the only differences with the downtrend is that it consistently makes lower highs and lower lows, lower highs and lower lows, and consistently breaking the lows to form a downtrend, price moving all the way down, right? So now we can get into the more fun stuff and the more intricate stuff. Right, now since you understand the fundamentals of market structure, I want to introduce the bullish market structure and the bearish market structure and how you can spot these things in the live market chart, right? So look at this, right? So this is a bullish market structure, right? As you can clearly see, these breaks of structure that are happening all over the place, right? So now here's the most interesting thing that I want to start off, right? So clean, here's a low, price came to this high, made a high, came to this low and pushed up. This is called a bullish rally, right? Or an impulse, right? So an impulse initially happened, and the impulse started from where? This over here, right? So we'll classify this as a major low. So let's just highlight this as a thingy. So the lows will make them blue, right? And then now when we look over to this point over here, this point that we see clearly over here is a high, right? The main reason why I'm calling this a high is because of the retracement, right? After this high was formed, a retracement happened. So we will classify this as a major high, right? This is how you identify market structure, right? As much as it is in the previous short that you just saw, it's just clear up, down, up, down. Now here I'm incorporating the things that you would see on the live market chart, right? So now since we've established that, okay, cool, we have major highs and major lows, right? Anything that happens between these two highs and lows is called internal structure. So let's just fix this up, right? So now, as you can clearly see, we've classified this as a major low, and we've classified that as a major high, right? So now anything that happens over here is classified as what? As internal structure, right? So now here's where it gets interesting. So now if price comes to this point and breaks this low, we'll take this as a what? As a reversal signal. So if price comes and breaks a major low, we'll classify this as a change of character or a reversal signal. And if price continues to break this high, quote unquote break of structure, we can classify it as a continuation signal. So once price breaks a major high, we understand that we're continuing with the trend. If price breaks the major low on a bullish setting, then we understand that we're looking for a reversal signal, right? So now obviously tapping into the lower time frames, understanding that anything that happens over here will be classified as internal structure. Anything that happens in between the major high and the major low is internal structure. Now I want to tap into the bullish, the bearish market structure, so you can also understand it in a different perspective. All right, so tapping into the bearish market structure, so you can see it also in a different perspective. Like once the way we did it in the bullish market structure, we'll do it in the bearish market structure, right? So obviously the way price looks right now it's basically like this. The way I just showed you before this is what is basically happening, right? This is what you would see on the higher time frame, right? But tapping into the lower time frame, this is how price looks like, right? Obviously this is the major low, this is the major high, this is the major low, this is the major high, right? In retrospect, understanding it from this basis, right? So now tapping it into market structure in and of its own, where these multiple highs and multiple lows, right? The highest point, right, that initiated the break of structure is the major high, right? And the main reason why I use this example perfectionly, because I understand that a lot of people will use this high and be like, oh yeah, it's the major high. Understandable, but the highest point after the break of structure or a change of character is the major high or the major low, right? Depending on the setting. So now this is the major high that we have, and then this is the major low. Why are we calling this the major low? Because it's the last low after the retracement, right? So now let's mark it out. This are the highs are red and then the lows are blue, right? So clean cut finish. So now we understand that anything that happens between this point and this point is classified as what? As internal structure. So you understand that everything that happens over here is based on the way structure is moving, right? And like I said it before, we'll run it back again. Now, since this is a bearish market structure, right? Once price comes and breaks this high, we can anticipate this as a what? As a reversal signal. And if price comes and breaks this low over here, we can classify this as a continuation signal, right? So now, using things like breaks of structure, changes of characters to understand what trend you are, right? So now this is the intricate steps that you take, understanding that, hey, we are in a downtrend. Once you understand that we're in a downtrend, identifying the breaks of structure that happened. Here's a break of structure, here's a break of structure. Number two, identifying the major highs and the major lows. Once you have identified that here is a major high and here is a major low, then you understand that I'll be trading between these two ranges, or this range that we have over here, right? And obviously, if us understanding there's an order block that's probably printed over here, as much as it is, when you understand that I am looking for sales because we are in a downtrend, right? Obviously price doesn't have to really respect it and it could reverse and break up. But once price does this and breaks out of this structure, then you understand that, hey, take the market's language, listen to what the market's telling you, hey, we're reversing. This is a reversal signal. Now we're starting to look for more bullish setups. The overall trend has changed, right? So understanding the core basics of market structure makes it simple, right? So now I'm gonna tap in and show you the live market examples on the actual charts for the bullish and bearish market structure, and give you a little bit more tips on how you can use it in your trading. All right, now bringing it to the charts, right? The candlestick, so you can see it and actually believe it and actually trade it, right? So now understanding the concepts that I just taught you, we're going to tap into the bullish market, right? We'll explain it from head to toe. So now I want us to focus mainly based on this trend, right? As we can clearly see, this is a downtrend. We've established what trend it is. That's the first step. What trend is this? This is a what? Is a downtrend. We've established that this is a downtrend. Then now it's identifying the breaks of structure that has happened and the changes of character, if there are any, right? So I've identified that there's a break of structure over here. Relatively just looking at this price alone, let's just leave everything that's happening at the back. So let's just move over here. We highlight this as a break of structure, right? Now look at the beauty of this thing, right? So understanding that, okay, cool, we understand that price has gotten to this price has broken this low, right? So now this is the high that it had formed. Price came over to this low, formed this low, right? So now we can mark this high as the major high that has happened, right? Then that's red, and then this is the major low. This is what? Blue, right? We'll mark it out as that, right? So anything that happens between these 2 points, we classify it as what? As internal structure, right? So now price, what does price do? Price retraces back. Price fails to do anything in terms of break this thing, this major high. So it breaks the major low. So we understand that this indicates what? Trend continuation, right? As soon as that happens, we remove these things, right? We remove that and that. So we understand, okay, cool, that's the change of thingy. So now we come over here, right? And we mark out this as a break of structure. Clean cut finish. Here's a break of structure that happened over here. There you go. So now break of structure happened, right? What happened after the break of structure? The low has been created, right? This is the highest point the price has gotten to in terms of the retracement, right? This is red because it's the high. Then we come over here. This is blue because it's the low, right? It's the major low. This is the major high, right? Where are we trading in? This is the major high that we're trading in. This is the major low, right? So now we're waiting. Does price break this high? If it breaks the major high, what is it? It's a reversal signal because we are in a bearish, in a bearish situation, right? So now coming into this situation, we can clearly see that price broke the major low, indicating trend continuation. So we come again, then we're like, okay, cool. Since we understand that, then we know we're in a lower downtrend. Like since it's a downtrend, this is the way you can anticipate those sniper entries because you understand where the market is trying to go, right? So we come. This is a break of structure that happened. Once again, we run it back again. So okay, cool. The high is red, like we mentioned before. This is the major high, right? And then the blue is the low, right? We make it blue, right? And we can see that, okay, cool. Where are we trading in between, right? So we're trading between the major high and the major low, right? Has price broken the major high? No. Price has broken the major low? Yes. Is it a trend continuation? Yes. And then this is a very, very, very beautiful example because look at this. The market is not as perfect as clean cut break, carry on, clean cut break, carry on. It gives you things like this. So you have to be really careful, especially when you're trading these types of these markets. This is GBP USD on the 1 hour time frame, right? But understanding that the simple concepts, like look at this, this happened once, twice, 3 times, right? The third time is a bit weird, but that's how the charts are. That's how the market moves, right? Understanding that, okay, cool. Now let me even break it down with the messiness so you can understand and how to use it in the charts, right? So now looking at this thing as the way it is, right? Okay, cool. Okay, classify this as a break of character, right? But price continued to move higher and higher. It came to this high, right? So this is a high that I can clearly see over here. Let me mark it out like this. This is a high. This is red, like that. And then this is blue. This is the lowest point after the retracement has happened, right? So we'll label this as what? As blue, right? So what are we trading in? We're trading in between the major low and the major high, right? Price fell lower to the downside. It failed to break this major high and broke the major low. So we understand that major low has been broken. So we understand that we are in a what? In a downtrend, guys. In a downtrend. So I hope you understand the bullish setup, the bearish setup, my bad. So we can tap into the different types of perspectives now on the next one. All right, so now same situation again. Now we're tapping into the bullish perspective, right? So now it's the same situation that you clearly see, understanding what trend you are in. So clearly you can see this is an uptrend. The price is moving higher and higher, right? So now how do you how do you execute based on this, right? So we'll start basically, let's start from here where it's the most difficult to see, right? So now we come over here, the low is blue and then the high is red, right? We come even over here, the high is red. Then what do we look for, right? This is the major low, this is the major high, right? As you can clearly see, price had come lower and lower but didn't really break the low. It mitigated this order block and flew higher, right? Immediately as soon as it breaks the high, then you understand, okay, cool, we are looking for continuation signals, right? We're looking to buy the market more and more, right? So now let's move these, right? So we'll move this over here because we'll classify this as a break of structure, right? We'll classify this as a break of structure, clean cut finish, break of structure over here. Now we move again, right? So this is the low, we mark it out blue, and then afterwards we mark out the highest high, right? Because of the retracement, right? This is the highest high, mainly because it's the one that came back all the way to the low. This is a major high. The high, I'll give you a small tip, right? The major highs and the major lows is the ones you can clearly see. Like this is a major low, that's a major high, this is a major low. Lows you can see, you get what I mean? Like those are the most easiest ones to identify. That's the most easiest way I could also explain it, right? So now we come back again, right? This is a major low, right? This is a major high, right? Let me mark it out like this. So now, what are we trading? We're in an uptrend. We understand we're looking for buys. Once price moves up and makes this major high, we understand this is the range we're looking for. Any order blocks we're looking for over here are any blocks that we're looking for. We can even implement things like premium and discount, doing it like this, right? Prices came into the discounted zone, hence why it respected the way it moved up as much as it is, right? So now understanding, oh, okay, cool. This is the major low. This is the major high. We are in an uptrend, so I'm obviously looking for buys, right? Price comes in, it mitigates an order block, it flies higher, right? We do it again and again and again. We come over here to this point. Oh, okay, cool. Here's a break of structure that happened over here, right? So now, since there's a break of structure, clean cut finish, break of structure, this is a low. Lows are blue. Lows are blue, my bad. Let me do it like this. Lows are blue. Highs are red. No. Red, right? Now, where are we trading in between? We're trading in between this major low and then this major high, right? Clean cut finish. Price made a major high, fell into the lower point, respected, probably based on premium and discount. Price came into the discounted zone, hence why it reacted the way it reacted. Price moved up, right? Clean cut finish is the same situations, it's just copy and paste. Looking at it as time moves on, it's the same. Sometimes price comes in deeper, sometimes price doesn't even come in as deeply as you'd want it to, you get what I mean? But like those are the small intricate things that we look for, especially when trading these types of markets. Now, if you are interested in getting funded, there is a link in my bio. I am taking 50 traders and we're all trying to get funded before the end of the year, right? Offer lasts until the 15th of December, so make sure you secure your spot.